What's up, guys? It's September 12th, 2024. Had another bull leg in the markets. It was sideways, like a higher and then more sideways price action. So daily 45-minute chart. Bulls got a gap on the daily chart now, breaking out above the EMA. So they got a breakout gap. Question is, are bears gonna fill it, or are we gonna keep our bulls gonna keep the gap open? So there's the gap between Tuesday's price action, yesterday's price action, and today's price action. There's a gap now. We have a 4-bar micro channel, leg 1, pull back leg 2. I think this is strong enough to get its second leg higher. I still think that this is strong enough to get a second leg higher, so we have to ask ourselves what's going to come first. We're starting to trade at the high of the range that was put in last month. Bulls close this gap. 45-minute chart. Consecutive bull bars. These bars look nicer, and we're starting to pull back. We have a spike breaking above both EMAs. Pull back and continuation leg 2. Spike broke this low, so now we're in the leg 3 on the 45-minute chart. Yesterday's price action, we had a sell-off, and then we rallied and we closed at highs, which is pretty rare. This was this bar 1 open, and up until here, I really thought we were going to have a bear trend for the rest of the day, but then the market rallied and closed at a new high. So that showed you the strength of the bulls. Today we went range bound, so where are we in the market cycle? Yesterday we had a breakout. Today we're going more sideways. Bar 1 is right here. So bar 1, bar 1 is right here. I don't know why I pointed there, I got confused. So 81, bar 1, range bar, bar 2, no body to doji. Bar 3 is a doji with a bear bar. Bar 4, here we go. First gap bar into the EMA. Oh, since bar 30 yesterday, we haven't touched the EMA. This is the first touch of the EMA, so that's a good buy that can lead to the previous swing, and it did. So bears I got short here got trapped. Bulls made 1R buying a bear bar before bears made 1R shorting a bear bar. So that already tells you something's up for the bears if you're trying to short. I got trapped shorting here, so I reversed and made it back. Leg 1 for the bullish, trying enough to get to leg 2 move, but we're in a range bound price action. So we have a leg 1, pull back leg 2. But then this whole move is strong enough to get a leg 2 move. And then bears get a deep pullback, and I think that's strong enough to get a leg 2. So leg 1, pull back, leg 2. And then here's that delayed leg 2, leg 1, pull back, leg 2. In ranges, we can have delayed pullbacks. Delayed leg 2s. So I think that's what we see here. Leg 1, bears get a pullback, leg 1, pull back, leg 2. Bulls get their second leg. Range bound price action, wedge top, it sells off. Leg 1, pull back, leg 2, pull back, leg 3, wedge bottom for the bears. Wedge bottom into the EMA. Look at the closes, look at the bear closes. I was trapped short in this, but I got out quickly. So let's talk about it. The bear closes, bears are getting closes below the EMA, but they have a lot of tails. That's not the best thing. And they have 3 pushes down. So leg 1, pull back, leg 2, pull back, leg 3. 31's a good bull bar, closing on its high above the EMA at range lows. I think 31 is a good buy. 32 is bad follow through, but it's closing above the EMA. 33, 34. I got out on 34 at the EMA, so I went short right here. I lost a couple points. I think it was about 2 points right here, or on 34. I mean, and that's because bar 31 is getting follow through. That's bull bars. That's a spike, and then a 3-bar micro channel. 31, 32 painted bearish, but has bullish properties underneath it. There's bullish pressure on the EMA. 33 bullish rallies, and then bullish rally, but bullish rally, but the body closes bearish. Again, it's a range bar, has more tail than body. It's just painted black, but we're in a bull channel. 36, 37, 38, 39. See bull pressure start to stack up. If I was watching these 2 bars paint, this bar kind of sold off, and then it sold off in reverse higher. So bears that went short here are trapped. It was a fast reversal. It was bouncing, then it kind of sold and went boom. So bulls are buying the lows, bears are trapped, bears are forced to buy back. Bar 40, 41. Bears are buying back shorts, bulls are buying lows. 42, bulls get the breakout above the swing high of the day, and they go for 3 legs. So 42, so spike, This can be one leg, or we can reset the leg count with the breakout here. Leg 1, 47 breaks the channel line. Leg 2, 45, 46. 46 breaks this channel line. Leg 3. Leg 1, channel line break. Leg 2, channel line break. Leg 3. Leg 3 is range bound price action. So there's your market cycle, and we go more sideways. So the breakouts for the day. These are all good breakout bars, but what are they breaking out of? It's more. These bars look nice because they're vacuum tests. I got trapped on a couple of them, but I hit out quite fast. So yeah, we have to ask ourselves about the breakouts. These are good breakout bars in a bull trend, but we're more range bound. Bears are shorting highs and making money, and then finally we start to break out here. So 30 reversal is a form of a breakout. So you could buy this saying it's a breakout. You could buy this saying the market had a bull breakout. We're channeling. Now we're getting that second leg. So 39 broke the low of 38. So that's a form of a second leg. And then we start to channel higher. There's a gap here. So the high of 38. The high of 39 is 70. The low of 42 is 70, 75. So there's a 3-tick gap right here. So bulls are getting gaps now. That's good. Bear gaps, if there are any bear gaps, they're closing. And then look at the gap for between 41 or between 40, 41, and 42. It's a big bull gap, so that's good. That bull gap led to a breakout above the high of the day. Leg count reset 42, breaking out. So leg 1, 47 breaks it. So leg 1, break it. Leg 2, 56 breaks the trend line. Leg 3, I mean, even 60. We're going more range bound. So the market cycle. Range bound price action. Breakout resets. We get 3 legs. That third leg is usually the last leg in trend, first leg in a trading range. That's what we got here, trading range price action. After the third leg, we got that trading range price action. You could fade it back to the recent highs, and then it sold off. This created a double top. In the previous video, I talked about double bottoms. This is what creates a double top. Bulls that get trapped at bar 54, they buy the high tick, they buy more lower, they get out at their original price, so they make a scalp on their second target, they get out at break even on their first target, and that's enough selling pressure double top to create a leg lower. Look at these 3 pair bars. So 63, 64, 65. You might be thinking this is a good breakout, and I did too. But the reason I didn't take it was because of the way it happened. See this breakout? They're relatively similar. Okay, we have a big bar, and then the bars are relatively orderly. Small bar, relatively orderly. Not the best breakout, but the bars have a little more order to them. And look at this bar, 63, 64, 65. In relation to the previous bar, the bars are growing. So one could argue 65 is climactic. We're in a range, sold off, and it vacuumed up. So this could be a sell vacuum, retest, big up, big down, and we go sideways. I bought I believe I bought 68 and then I got out for 1 tick here, profits. So leg count, okay, we kind of did the leg count, kind of did the breakouts, and we did the market cycle. Okay. Yeah, I like to look at this from breakouts, market cycle, and leg count perspective, because that's pretty much what I use to trade. So here we can see that these gaps are getting put in and are being closed. There's a bear gap here that closes right away, bar 9, leg 1, leg 2. 1 second here. No gaps, even though these are nice bear bars. No gaps here. There's a gap here, and that gets closed. It's a bull body, bear bar, so it's not the strongest bear gap. Then bulls start to rally. They get a gap here, forewarning. Then they start to get another gap. So that's 3 gaps in a row. Channel for high of 46 is 590. The low of 48 is 89.70. So there's a 1 tick gap here. Is there a 1 tick gap or is it a negative gap? Hold on. The high is 90 even. The low of 48 is 89.75. Oh, so it's a negative gap. It's a negative gap. I drew it wrong. That's a negative gap. Okay. So we can see bulls are getting gaps. I just measured that one. There's another gap here. And gaps signify trap traders. They're really important. See how we're trending, gaps staying open, and then we go sideways? There's a bull gap here, but it gets closed. There's a bear gap here, but I think it gets tested. Doesn't really get closed. It gets tested with 75. Some would call that closed because the tail came up. So the bears that are... So the bulls that are trapped here with limit orders get their relief. They buy more here. They buy more lower. They get out here. I almost said that backwards. It took me a second. All right, guys. That's about 10 minutes. Hope you guys are doing good. Hope you guys are learning. I like to trade breakouts. And then I try and coast the market cycle. I'm avoiding ranges right now. Staying focused on one setup. It's working out. So hope you guys are catching on. Hope you guys are doing good. And I'll talk to you guys tomorrow. Have a good one, guys. Bye. Thank you for your support. And if you learned something, share the show. Don't be a hoe. I copied that from Andy Frizella, so I didn't come up with that one. All right. I'll talk to you later. Bye.